All right, and we are live. Not even fully prepped up. We want to go live though because we don't want to be late, because that would make us like Tanner, the very
That's right.
person we vowed to start a podcast against. Roy, what's up? How are you feeling?
Pretty good day in the market. All-time high for me in my personal portfolio.
Congratulations, man. It's
Papa
fantastic.
Powell came through, man. How about you? How are you doing?
I'm doing okay. Just like work stuff. Just busy day. I feel like a year of my life has passed in this 1 week alone. So it's just been one of those weeks. Hold on, let me get this up on the other screen
Yeah.
and let the audience know what we're talking about today.
Yeah, we're going to talk as many things as we can get to in this hour, guys. As you know, this is not Sofi Weekly. There is no Tanner here. We don't have to fear him. There is a lot of news, and of course, we're going to talk about Powell and the rate hikes or rate decreases. We'll do that a bit. We'll talk about Apple. There's some news there with a breaking news type thing about an hour ago that the Department of Justice is suing Apple. We don't know fully what that is, but we'll talk about that. Of course, the Apple potential Google or OpenAI partnership and what that might mean. There's a lot of Tesla news, a lot, and I'm a shareholder. I'm interested, and of course, my favorite flavor of the month company, Robinhood. A whole lot of news there. We'll be looking at crypto. We'll be looking at the UK launch and a couple other pieces there too. So, pretty jam-packed night. If we don't hit everything, we've got X profiles. We've been posting some of this stuff, and maybe we can take over SoFi Weekly on Friday. Maybe not though. But yeah, as we're since we don't really talk too much about SoFi, I will just start with that. This is a good day for SoFi. It's a very rate sensitive stock, a little bit more than the actual company is. And between Powell's comments and between what the conversation was with Jim Cramer, we'll talk more about that on Friday. We might have hit the bottom. I mentioned to you, I think last week, I was like, hey, if it goes to the sixes, I'm loading the boat even more. And you were skeptical. Yeah, you're in the middle of a snowstorm. Yeah, what do you think about where we're at as far as a price?
With regards to SoFi?
Yeah. You think we're at the local bottom?
I mean, does it really matter? Look, I think the important thing to note is that Anthony Noto came out. He was bullish. He explained the news very well. I think he boiled it down in a very digestible way for people to understand what was going on. And I think that ultimately just reinforces their message that they've been highlighting all along, to basically say, hey, we are still on track. This was a move we did strategically from a position of strength, and the stock is going to do what the stock does. I mean, I don't want to preemptively get excited about SoFi because it's the boy who cried wolf a little bit. It's gone from 7 to 10 to 7 to 10 to 7 to 10 to 7 to 10. And so we're at 7 now, and like, yeah, sure, had a good day. I think like almost every single stock in all of my portfolios, like dividend growth, crypto, like everything was green today. So that's obviously positive, but at the same time, I think trying to make comments on the short-term price action is like shooting a dart at a dartboard when it comes to SoFi.
But darts are fun, man. Darts are fun.
Darts are fun. The important part, I think, is the underpinning of that entire message.
Yeah.
To just say, I work in software, and they say for software on our sales team, you have to have like minimum 7 touch points with somebody, like repeat the same thing like 7 times before people actually get it, because they're not listening. They're tuned out. Maybe they don't hear it the first couple of times, or it's different people in the audience. And this is something that I think SoFi management does very well, is repeatedly being consistent with their messaging and their promises, right? We've heard profitability. It happened. And now we're hearing this 2026 EPS number and what that growth is going to look like. I think the most exciting thing that Noto said, and again, this is not like SoFi Weekly, but I think the most exciting thing that Noto said was 40 to 60 million in savings because they are knocking off some extra debt. If they can get 60 million extra in EPS, they're already halfway to their goal for the end of the year, if not more.
Yep. Oh yeah.
What are their expectations right now, right?
It's huge.
So it's just ridiculous. Like the company can go on vacation for half of the year, and just from these savings alone, they would still hit their numbers based on what Wall Street has them doing at the end of the year right now.
Oh
Like
yeah.
the estimates from Wall Street are so low that they literally don't need. They can have zero growth from this point onwards, and they can still hit like 4 to 5 cents EPS, 4 to 6 cents EPS through the end of the year,
Yeah,
and
the
it's
biggest
trading.
piece that really, encouraged me is not the Noto and Kramer, it helps, it's helpful. There was, that 60 million piece really helped, I think, clarify some things. There was a couple other pieces, we won't talk about it today, but it's this piece, right here, if you wanna share that slide. Of course, Powell went on, he had mentioned, there are some concerns, and I don't think it was actually factored in as far as probability, but that there might actually be rate hikes, or if there weren't, then there would be fewer than three rate cuts. And Powell, I thought he'd come out pretty hawkish. He came out dovish, and so I'll let people read the comments there. But main thing is, if you look at, and this might be a little small here. That's a little bit better. If you look at probabilities, these are just probabilities. They shift every day. They shift every week. Right now, we're looking at for June a 67.4% that we actually go down to 500 to 525 basis points, and there's even 7.5% of people that like to live on the edge and think it's going to be a bit more of a rate decrease. So there's 75% probability right now we actually get the first cut in June. There are some that still think May is going to happen as well. But you can just see how much things shifted. That it was previously, we were looking at about a 41% likelihood that there was going to be absolutely no cuts prior to Powell's comments in June. And it may have been far later in the year. So this is why, the number one reason why the market just took off today. There was other reasons too, of course, there always are. But I don't know if we'll get continuous on it. Yeah, like you never know with short term price action. You're right; it's like throwing darts. But just because how sensitive SoFi is, it's led to I think probably a local bottom between that and Noti's comments. You have any comments or thoughts on Powell's talk or rate hikes or lowering rates, Tevis?
Yeah, look, I think this is. I mean, I said this with Tanner a little bit earlier tonight, but with situations like this, you just have to give it time for the thesis to play out. Like everything, all the ingredients are there. You just need it to let it sort of bake for a little while. If you expect something to happen too early with a stock, I mean, with SoFi specifically, you're not really going to get that. With regards to rates, we've been saying this, right? We've been talking about, May cut, June cut, whatever. We're going to have several cuts this year. Like that's going to happen. And we've seen from days like today demonstrated how the market responds to those cuts. We're going into an election in the fall. Like the market is going to be positive. Yeah, you can have a short-term pullback because people are like, "Oh my god, we've gone up too much too quick." You can have a short-term pullback, but I think that the trend is overwhelmingly positive, and you just have to give it time to play out. Because with SoFi specifically, there's going to be a few things converging all on the same year. Profitability is one. The massive discrepancy of that profitability, I think, is more emphasized because with deals like the NBA that gives exposure in terms of new member additions, with this convertible note offering, there's so many different moves that they're doing behind the scenes that will ensure that they far exceed Wall Street expectations for EPS. And so, like, think about it this way. If Wall Street consensus for SoFi is 6 cents of EPS, and if they come in and Q1 they report 4 or 5 cents EPS immediately, then Wall Street's going to look like an idiot if they don't raise consensus. SoFi is going to raise their consensus. They're going to report Q1 and they're going to raise again because we know we're heading into this year. And then the other thing, the other underpinning or the other vector to look at this at is all of that guidance assumes worse than reality macroeconomic conditions. More
Absolutely. Yeah.
fewer cuts, a harder landing, more unemployment in general. So all of these things are converging at the same time. And meanwhile, we're looking at a stock that's been sitting at the $7 range. And I've said this in the past multiple times, but every single couple of quarters, another big major bear case is broken down.
Yeah.
The other vector I think for SoFi specifically, and we can move off SoFi, but the other thing I think is per Ortex, I posted this earlier today, there's 173 million shares sold short. That's 19.5% of float. And so short interest is at an all-time record, right?
Yeah.
And I think, look, Palantir, it was at second quarter profitability that shot them through the moon. Tesla, it was at second quarter profitability that shot them through the moon. The market really needs that confirmation. And for SoFi, guess what? Second quarter profitability is end of April. That's going to be coming right around the time of, we're around that time, we're going to be expecting our first rate cut as well within the next, like in that quarter. I think that there's a lot of things converging, right? If you put the short interest on top of all that, SoFi always has like an ace up their sleeve, rabbit in their hat, whatever you want to say, with regards to what initiative they're going to launch next. They can come out tomorrow and have a big partnership or anything like that. You always have to have a premium on those types of things. Is the stock broken? Absolutely it is today. But I think, I subscribe to that idea because Tesla's my largest position, right? And so that's the model that I'm following by subscribing to that idea of like the longer you have the base, the higher in space or whatever the stupid acronym is. But basically saying like the longer that a delta forms between the company fundamental execution and the stock price staying stagnant, the more aggressive that rip up is going to be. And
and I'm with you. I'm with you all the way. I think that there is at some point there's going to be capitulation on the short end. I think that, and you mentioned Tesla, and I want to go there in just a second. But if you looked at the stocks that were getting hammered over the last week and a half, 2 weeks, it's not just one thing, but I think one of the largest factors was a lot of people were concerned that there would not be cuts, there would not be many cuts, or there would even be raises. And that's detrimental to SoFi. It's not as bad as what the price action indicates, but it's actually very detrimental to Tesla. Tesla's been struggling under these high interest rates. I think that once there's meaningful cuts as far as that, then that probably cures about 75% of what ails Tesla. And so if you look at Tesla's price action, I've been buying Tesla. I don't have near the position that you do. It's I believe it's fifth out of my stocks. So I've got 5 basically in minors. So, but I've been adding. I've tripled my position in it this year, and yet it's still 3% just because price action. But the thing is with Tesla, a lot of people are like, "Why are you buying now? It's stupid to buy now. It's a falling knife." Technically, yes, they're absolutely right. And I was thinking it could fall farther. You never know what's going to happen in the market, and so I've been DCAing. I've been adding slowly, and I a lot of people have been aiming at 150 or lower. Some people are like $80, $100. We could get to 150, but
like there's no way. I think the further down you fall, the harder it is to fall further, right? If a company's fundamentally executing, at some point the sell-off is completely overdone. Yeah. And with Tesla, I don't think we're going to get to 150. We could definitely get to 150. Yeah. But if we do get to 150, I definitely don't think we're going to like 120 or 115. I think those were very unique circumstances when the market, and that was the month that the market actually bottomed. This was January of 2023. The entire market bottomed that month. And so every year we have like our tax accounts unlock a limit. So basically, if I have, let's say, $10,000 to put in on any given year, I get tax-free, capital gains free, like a Roth or an IRA or whatever.
Yeah.
And the limit resets every January. And so I had cash ready to go. And in January of 23, I just threw that entire amount in Tesla and was like within $10 of the bottom. I think I bought like 112 or something. Oh, and that thing ripped, in the first half of 23. And I kept buying all the way up, 150, 160, 180, anything under 200 really. And I stopped buying some point at the end of Q1 23. And I actually just purchased, last week, I think, for the first time in a year, because we're at that level again where it's like, again, same situation with SoFi. The company underlying is executing. Yeah, they're going through some hard times. They have the margins that they're going to be hit with, whatever. The price is being cut. You'll see this huge fluctuation huge correlation, I want to say, between the stock price and the models price, the models get bumped up by 1,000, the stock moves up. The models get bumped down by 1,000, the stock moves down. It's so stupid in my mind because over the long tail, like that business is going to be fine. It's very reactive to short term things. So, but Tesla has a high beta. Like it's a volatile stock. It's not. It's not like a you buy whatever and buying it like Target and fucking just hold it all the way through.
Yeah, throw up these this right quick, if you would. I'll blow this up. Beyond the actual interest rates, Tesla had a few big items. One of those, of course, is FSD 12.3 is releasing. It's I think most of the people that have been waiting on it have gotten it. I know that there's still some people waiting. Um, Early reports, most people have mentioned just how smooth it is. I don't have a Tesla yet, hoping to rectify that this year. I won't be getting FSD until it's actually full self-driving. I want to just, chill on my phone or read or whatever, take a nap. We're not there yet. We're years and years away from that, but we may be actually a little bit closer than we think. So this is an interesting post. Got a lot of attention on Twitter, and originally from Korean. This is a guy that says the direction I heard at Tesla's informal meeting at the beginning of the year was FSD and Optimus all-in strategies. We internally expect that this strategy would be successful by June, July, and believe that volume and profitability would naturally flow based on this. And what's interesting about this is Elon Musk mentioned rolling out some improvements every 2 weeks. Of course, other Tesla people picked up on this and started tweeting things out. And he just clarified, he's like, hey, these are like internal comments and discussions. They're not like necessarily predicted. Like he's basically covering himself because you never know. Like it doesn't mean that FSD is going to actually be leading to robo taxis or anything immediately, but this is certainly one of those new price vectors and bull cases for Tesla that I think will come before a lot of people expect. Maybe not as soon as like in summer, but I don't think that we're necessarily going to have to wait years and years and years and maybe be looking at like 2030 or something ridiculous for this. And at the same time, there was, oh man, I'm forgetting his name. Jerry Riggs Everything. Are you familiar with him?
No.
He's been largely a Tesla tech bull for a while. I don't know, as far as stocks or anything, if he's really into that. He came out with a video touting how Tesla's behind on a lot of things and was raving about how good I don't remember what it was called, but the Ford equivalent is. And of course, it came out that his video, it has a little disclaimer underneath it, was sponsored by Ford. So, surprise. I mean, like if Tesla wanted to pay me a bunch of money to say nice things about them, I believe it for one, probably. But, I'm like, hey, I will put the disclaimer. You'll always know. But no, if they want to send me $100K to do that or a new Cybertruck, sure.
Look, the other interesting part aside from this is the fact that a lot of people right now that I follow, I mean, my Twitter is fairly curated for the stocks that I follow on those content creators. So a lot of the Tesla ones, the sentiment that I've been hearing out there is that they're starting to refer to it in 2-year cycles. So the Model X and Y was the last 2-year cycle, and then the next 2-year cycle is going to be like this Gen 2 Model 2 vehicle, whatever, next generation, which is expected to be announced at some point this year, towards the end of the year is my guess, and in production shortly after that in 2025, 2026. But I think the thing that they're completely discounting is a Cybertruck, which I'm seeing every celebrity, man. Every celebrity is getting one of these. I like in the past 2-3 days alone, I saw like Steve Aoki get one. I saw a couple of rappers get one. Like so many people just have been getting it and posting about the Cybertruck, making videos about the Cybertruck. I've been seeing like YouTubers giving like an Uber ride in a Cybertruck, and just everybody that you pass by is like taking pictures of it. It's just insane. And the thing to consider about the Cybertruck specifically is, first of all, people are discounting it as like, oh, whatever. It's cool, but it's nothing that's like going to move the needle. Keep in mind that the margins on the Cybertruck might not be great right now.
Yeah.
But they're in ramp. Exactly. They're ramping up. And so once they ramp up, they're going to lower the costs and the margins are going to get much better for the Cybertruck as well. And then they're going to sell more models. They're going to sell everything that they produce and then some,
And the thing is, people forget rights a lot. First, Tesla is not just some like startup that doesn't actually know how to scale and ramp and produce things. They've done that successfully. Cybertruck is more complicated. Margins tend to be better on trucks, but Wright's law comes into play. And so Wright's law is basically for every doubling of production, you have about a 20% cost savings on the production, just because of efficiency, supply chain gains, just being able to buy a lot more of a certain product that you need at once. It doesn't hold true for every single product every single time, but that's just a rough estimate. And so these margins will continue to improve as Cybertruck orders get filled, as they continue to scale. I don't know that Cybertruck's not going to be the Model Y. That thing is just selling like hotcakes, especially with the EV, the price credit right now. But it seems like I was skeptical at Cybertruck being much more than a driving advertisement. It certainly is that, but it looks like it actually has some lasting appeal. So it's not just going to be some niche product. I think it'll actually outsell the X and the S fairly soon. By fairly soon, a couple of years. The Model 2, though, that's something certainly that they've talked about. I don't know when that they'll actually announce that. Hopefully later this year. But that seems like it's going to be a lot less complicated than the Cybertruck. They'll just strip away a lot of features, most likely from the Model 3, and then just roll that out. So much simpler ramp. I expect that it would have very broad appeal, because that's actually a niche where, depending on the price point that they end up with, there's not a lot of brand new cars, especially decent ones, that are under that $30,000 value. It's really tough to find right now. So there's certainly a market for it, even among the EV segment. And they're just going to own that market, just like they do for most things that they launch.
Yeah, I also think for the Model 2 specifically, I don't know if you saw the Don Lemon interview. I watched it yesterday.
But
There was like 30 seconds of valuable like insight on Tesla specifically.
yeah,
And there was two things disclosed there. Number one, he talked about the new Roadster, which is a collaboration between Tesla and SpaceX, and Elon has hinted at in previous tweets, saying you can do 0 to 60 in under 1 second, which is like they're basically putting like jet thrusters on this thing.
yeah.
So,
They'll have to have some safety features on that. Not
oh my god,
that'll kill people otherwise.
like absolutely kill people. Like this
Yeah,
thing can fly essentially. Like I think that's with Tesla, it's just the cool factor. Cybertruck, new Roadster, like that itself is its marketing and advertising, its PR arm, right? Like
oh yeah,
the products sell themselves because they're so unique and they're so like going against the grain. Now, the second thing that Elon mentioned, was really with regards to this Model 2 car. And he basically, Don Lemon asked him, is it, does it have a steering wheel? And Elon's like, kinda. And later he said, it has the yoke similar to the Cybertruck, and it's steered by a wire as well. So, like, I think this model, like, they're going to cut costs as much as possible, leverage all of the previous learnings they've had on operational efficiencies and operating leverage with previous models, and try to make this thing the most mass produced vehicle that the company has ever done in the past. Like Model Y and Model 3 are the big ones right now. Later, I think it's going to be like 90% plus Model 2s, because they're just going to be so much cheaper to make and so much more accessible from a consumer standpoint. That's the bull case in the long term. Where, I mean, Kathy Wood had this, myself, so many other people, where basically the entire bull case is that there's no reason not to buy an electric vehicle, because it's going to be cheaper than an ICE vehicle. And there's so many more like additional benefits, like over the air updates, et cetera, right? So I think that the Model 2, when that's announced, is going to be a really big deal. Tesla has proven that they can scale successfully with their previous models, and they're proving it out right now again with the Cybertruck, which is so unique and so like over the top. And they're still like scaling that out, improving the margins on that, and getting to mass production. Once they roll out the Model 2 and explain all of the operating efficiencies that they have there, that's when they really like turn the dial to max and just crank those babies out like hotcakes.
yeah. Pop that up there for just a second. This is relevant. This is a guy that's a good follow if you're into Tesla or cars or anything in that general car dealership guy. He's not a Tesla guy. He's not a Tesla bull, and didn't even mention Tesla here. But he mentioned vehicle affordability is a top issue for the car market, yet used car prices are above 35K, the highest sales right now. The reason, a lack of inexpensive inventory. Cars priced at 30K or below are the most supply constrained right now. And he had several other posts that he went on to, and he talked about this, that there's so few so few cars in the United States that actually meet this threshold. And there's a lot of people that would like to be able to buy a new car that doesn't cost, especially with interest rates this high, much of their disposable income. It's a real need. And so, depending on when Tesla can announce this and how soon they can ramp it, these are basically the perfect times to launch something like this because there's no competition yet. And so, even if it doesn't really matter even who's elected, like if it's Trump or Biden, whether they do things to prevent China possibly importing more cars in the United States or not. This is a huge market that Tesla, I think, will capture. And yes, there's people that are skeptical or will need to be re-educated. I'm just joking, guys, but educated on like EVs, that they're actually safe, that the battery won't blow up and explode every time you get into it, that you'll actually be able to save a lot of money on maintenance, that they're actually really fun, unless you like oil changes. If you love oil changes, terrible vehicle, don't get it. But this is, I thought, was pretty interesting news to kind of go along with that. The other piece that was interesting with Tesla too, as I mentioned, all this time, really since the beginning of 2023, there was this constant barrage of cuts, and that started with really the way that they reclarified that 7,500 tax savings. Tesla had to make some changes and moves last year for that, and those prices have stuck partly because of demand issues with the high prices as far as rates. And so they announced that there was $1,000 raise USD that's happening. You might have to correct me on this, but I think it's at the end of May or it's June. It's sometime around there. And they announced similar cuts elsewhere, including in China, or not cuts, raises, not cuts. And part of this, actually, it was April in the United States. And part of this is a lever that they can pull. It's a demand lever where they can say, okay, if somebody like myself, I'm thinking about a Tesla right now, not quite ready yet, but I'm hoping this year, is thinking about it. And I'm like, you know what? Why don't I just save myself $1,000 and buy now? That'll push some demand. So it'll help that very weak Q1. But I think it also does something else here. And tell me what you think about this. Since they've had just a series of unrelenting cuts, and occasionally they'll have like $1,000 off temporarily type thing. This is actually the first meaningful hike that they've done. That's not just taking off some $1,000 incentive. I think this is signaling to the market and maybe to investors as well, like, hey, if we have cuts, they're not going to be like they have been in the past, that we're either at or near the bottom as far as those margins.
Yeah, look, I don't read too much into the cuts simply because they're a byproduct of like the entire supply chain side of things, right? We know that this year is going to be constrained, for lack of a better term, from the cuts perspective. So I'm not too concerned about that because, I mean, for Tesla, like we're not buying it to trade it, and we know that next year and there's tailwinds that they have on the back end of 2024 going into 2025 and beyond. And I think that's the opportunity cost here is like, well, you're having a chance to buy the stock at a price that you haven't seen since 2022, essentially, and you're doing so for all of the benefits that you're going to get in the back half of the year and also in the next year when rates are going to be lowered. We're going to be in a different economic environment, different presidency altogether. And so I think that to look at the cuts with a magnifying glass and say, okay, well, they raised by 1,000, they lowered by 2,000, whatever. Like they do that on like a biweekly basis. It's not signal, it's noise, in my opinion. Because it's number one, too short-term thinking, and number two, so frequent that you can't make sense of it in a lot of times.
Yeah, I got to disagree with you there. I think it is signaling the bottom. Not that they won't necessarily make cuts, but that they're not going to make similar ones like they've done before, that they're basically done with that. So only time will tell. We'll have to see. I do think that there are times when they will do the temporary type promotion where they're like, hey, if you buy, and typically those come at the end of a quarter when they need to just push the demand forward or when they're getting near to that point. And like, hey, if you buy by this quarter, and sometimes they'll just pitch in things like full self-driving for 3 months like they've done. So we'll see. But yeah, between the full self-driving, The interest rate talk here by Powell. Not so much with Joe Biden saying, hey, EV expectations, we're not going to push that quite as much as the government. That stuff I don't think really matters. It's so far out anyway. But I think Tesla's is actually in a really good place. I'm still buying like under 200. Even somebody mentioned it there in the comments. Under 200, I just keep buying. If we go to like 220 or something, I'll maybe pause and wait. It's not a terrible price even at 220. But I'm cheap, so
So
a better price.
let me ask you this then, Roy, because
Yeah.
okay, you think it does matter pushing back, all fair. Um, by that same logic, do you think that the margins, this quarter that they just reported, were the bottom of the margins, or this quarter that they're going to report are the bottom of the margins, or next quarter are the bottom of the margins? Like, where do you think that curve starts to move around back up?
Yeah, I think it's likely this quarter is going to be the bottom.
The one that they're going to report.
Yes, the quarter one that they report. I think deliveries, it sounds like that those are going to fall. It's it's not great, but it's not shocking the market at all if they do. Even with this demand lever that they're pushing to drive some demand a little bit higher and faster. But I think that this, I mean, you never know. And Elon Musk could always bang on a table or say some sort of word that sends a stock either direction. But I think that likely we're going to be given more buying opportunity between now and quarter one, and even during quarter one earnings itself. I think that that might be that epic dip that people are waiting for. But I mean, we saw the dip back when you bought, beginning of 2023. That dip for Tesla did not last long. It's still a quality company. They still print cash. They're in a process of becoming a monopoly or near monopoly anyway, with EV and with the service industry as well. And there's a lot of vectors that they can have that grow. It's just this is a difficult environment, and with cyclicals like this, you really benefit. Like if you have high conviction in a company and you don't have the position that you want, and that's me with Tesla, it just makes sense to load up if you have time, if you give yourself time with shares to load up while the cycle is a down cycle. And you don't know exactly where the bottom is, but it's okay. You know, if you're long term, that's great. And one of the other cyclicals I want to talk to you about, I know you're not in this one, but it's that flavor of the year for me anyway. It's Robinhood. So Robinhood, they're a highly cyclical stock. I'm just trading it this year. At the next down cycle, I may go long. That's going to be a little while from now. I expect to be out by next January. But they ended up, you know, they've talked about this a bit. And if you want to throw that one up there, they actually officially launched today as far as UK. So they've allowed some people to use that. This is a statue that they put up. They put it in several different locations just to kind of do more advertising. They're really good at marketing and advertising. So they put it up in key places around London, and we'll have to actually see what this does with monthly active users. Now, you don't have a Robinhood position, right?
I do not have a Robinhood position. I don't have an opinion on them really.
Yeah, it's because you're Canadian, so it's
Look,
you're not
look,
allowed to like it.
I don't want to be misunderstood because I've talked negatively about Robinhood in the past. I'm bearish Vlad. I'm neutral Hood.
Yeah, no,
That's
that's fair.
that's the whole spiel.
I, I think Vlad. I mean, I was neutral, actually slightly positive Vlad, and he's actually impressed me. It might as well be Vlad. It's not. It's just Robin Hood. It's actually Tevis right there. If you look at the face, you know, it's no. But with this, I don't think it's going to make a significant impact on them right away, other than monthly active users possibly. UK, I don't fully understand all of the nuances of UK trading, but I do know ISAs, individual savings accounts. They are a huge feature of trading in the UK. And for most people under a certain income, they can invest and they don't have any capital gains tax at all. And so they don't have that vehicle right now. They don't have SIPs either with UK trading. They don't have options. And they also mentioned this was, I believe, on Tuesday, it might have been Monday, that because of some regulations, they were expecting to launch with margins and being able to do margins as far as with Robinhood. And they don't, that's all tied up right now. So, and of course, payment for order flow is banned already in the UK. It's going to be banned in a few years and the EU. And so they still have revenue that they can make off of this, but they're a little bit limited. It's kind of like a beta app right now. So people can get a taste of Robinhood, and as they roll out these other features, maybe they'll send some money this way. But only time will tell how successful this is. This is actually their third attempt at international launch. They aborted the attempt for Australia, and they tried in UK earlier. It just didn't work. Regulation is tough. So time will tell. But yeah, this stock, it's and company is actually doing quite well. So there's some other pieces of news with Robinhood too. So you and I mentioned that just a little bit, but they launched a crypto wallet as well
Yeah,
for the
for Android.
yeah. So do you think that that matters at all? Is that a needle mover, or I know you're not in the stock, but like, what was your takeaway from that? Just kind of a, expected, no big deal.
I mean, why wouldn't it be a needle mover, right? Like, there's Android is huge. It's not like it's small. I think they've already had hundreds of thousands of downloads on it already. Crypto is like the hot topic. It's going to be the hot topic even more so in the coming months. And so I think it's very topical. I think they're leveraging their position. They're essentially milking their position where they are right now as much as possible. And I think that's smart.
Yeah, they're what really frustrates me. So Robinhood's not available for you guys. You just have to pretend to be American to use it. But for us in the United States, we've enjoyed it for a long time. But their crypto, it's great. It costs almost nothing to actually trade on that back and forth if you want. I've got a little Dogecoin because to fulfill my inner degenerate gambler, it's under $200. It's no big deal. Although after today, maybe it's more. I don't know. But it's very slick, very easy to use. The only thing they've done in the last 2 years with the crypto side for the United States is remove crypto when SEC launches some sort of investigation or instigation against Solana and ADA. Yeah, we have like fewer options now, and so I'm looking at Europe where they have this, not the UK, and they already have 30, I believe 32, including Dog with Hat and the Bonk coin and all sorts. It's like I don't really like. That's not a long term thing, but like some degenerate money, just throw it in, have some fun.
Dude, if they have Dog with Hat,
Yeah, they do. Dog with Hat.
um,
But I'm serious. Okay, why in the world are we here in the United States and we have a bunch of? I mean, there's Litecoin. Like, I don't know anybody that's really bullish and excited about Litecoin for the last like 3 years. There's probably somebody in the chat that's going to get angry, and I'm sorry, but I mean it's true. It's so you look at the offerings; they're just really not that exciting. Bitcoin and Ethereum certainly, but it's like, could we not get some more cryptos? And the thing is, I had this post today where I was looking at it. I was looking at their website. They've added some verbiage where they're like, "Hey, more is coming soon." It's not like we might have more, like the United States, where you have to kind of search for that. They're like, "Okay, more is coming soon. There's going to be more Dog with Hat and all sorts of other degenerate trading cryptos." And since payment for order flow is not a thing, it's not exactly payment for order flow what they do with the crypto, but they'll bank revenue off of that. So I don't know, man. I as a shareholder, I'm excited, but I'm like, give me Dog with Hat. Not really,
dude,
but give me those options.
the entire chat is like bullish Dog with Hat, bearish Tanner comments, and like that's all it is.
That's right. Short Tanner,
This
not
this
short Sofi.
this shit and then this shit.
That's right.
Like, those are the comments. Matt, you're welcome to come on. The link is in your Twitter. Roy, I want to show you this, and I want you to talk to it for a second.
Talk to it.
Yeah. All right. Our boy Crossroads posted a portfolio update. Palantir, cool 69%, with Robinhood moving over to the second position at 11%. It was a 5% allocation in the summer, and it's over double right now. So it's 11%. SoFi, by contrast, was a 10% allocation, and it's currently 8% for Mr. Crossroads. Any comments on this? And you're actively building out your Tesla position.
Yeah. Actively building out that. Most of my buys this year have been Tesla and SoFi. Probably close to half and half, honestly. I didn't expect to add too much more to SoFi. I'm still filling out the shares side of it. But when you're given a gift, I mean, you just got to unwrap it and say thank you. So that's what I've been doing with SoFi. I mean, Palantir, it's always been ridiculous up there. And I know 69, but it's just it's my core position. I don't plan to sell it other than selling covered calls, making those dividends like Matt might mention when he's on here. Yeah, Robinhood, sometimes when you're invested in something, Palantir is run heavily. My portfolio is night and day different than it was at the end of 2022. And I'm very thankful for that. So Palantir has benefited from that. Robinhood, I'm 100% leaps in Robinhood. I have no shares.
Jeez.
I bought these last May, June, and a little bit in July, I believe.
Wait,
Um,
so sorry, Roy. Do you mean to say that 11% of your total portfolio is in leaps?
yes. uh,
You might as well buy dog with hat, bro, because you're already halfway there.
Yeah, well, so when you have conviction in something,
No,
but
I love it. I
you
love
want
it.
it as a trade, like load up. And when I like, I would have to actually go back and see. With Robinhood, I thought that I did a 5% allocation, and I wrote that, and I looked at it just briefly. I didn't have a lot of time. I think it was actually 3%. It has pumped, and when it pumped initially, I took my full amount of capital I put in it. I actually took that off the table. So I'm actually riding right now with about half of the leaps that I originally had with Robinhood, just because when you're in this scenario, you can't just diamond hand. Like you got to take gains. When you're up 400% on a position and there are leaps, you have to take those. So yeah, I'm loving it right now. Actually, a lot of those gains from Robinhood are just going right into Tesla and SoFi. So
Answer this for our viewer.
yeah, so the way that I saw Robinhood last May, yeah, I'd heard about it. I hadn't considered it a credible investment. The price was smashed so far down. It was in the sevens at the time, where they had on book 7 billion in cash, no debt. So on, their enterprise value was under 1 billion at that point, and they were nearing gap profitability. And so it was just like, okay, there's the only main risk is opportunity cost. Even the premiums, the IV was very, very low at the time. And so I was thinking about Robinhood as investment, as wondering, and I realized, of course, what happened with its initial IPO and excitement. I knew that it would recover at some point, that the Bitcoin cycle was likely to resume this year, as it has with crypto, and that Robinhood would benefit from that. And we saw signs at the time last May that the bear market was likely to end at some point. I couldn't exactly guess when that was, but it did end last year. We're in a bull market. And so I looked at those two factors. I didn't fully understand cash sweeps at the time, but I'm like, hey, equities are going to roar, crypto is going to roar. There's almost no risk with this position, and it's cyclical. So the bull market is not going to last forever. And the crypto cycle, it's fairly predictable as far as where it will actually end up, or when it will actually end. We don't know, can't pinpoint it to the exact month, but we can guess the year. And of course, every single time is a little bit different. And so between those factors, and then understanding the cash sweeps, the higher for longer narrative that Powell kept pushing, like even though I was expecting more cuts, the interest rates that they generate allows more cash to be brought into Robinhood. And so they are just printing money off of cash sweeps. Of course, they're printing money from their margins as well. And so they had what I call the golden confluence. And I think this might be the only time in Robinhood history ever where all three of these things fire at the same time, with high interest rates that are printing for them. They also have, at the same time, equities roaring, and they have crypto that is just going to the moon. And between those, all of these things are great for Robinhood. It was a side benefit with the X1 purchase. They're doing something later this month. It was a side benefit as far as the international launch. These are possibilities. But we were basically pricing the business as if it was worth nothing, while all three major aspects of the business were roaring. And so that, it's for sure, like we're in 2024, is going to benefit Robinhood immensely in 2024. Stocks in the market are forward looking. And so I think that a lot of Robinhood's gains are going to be priced in from this cycle. It's cyclical. So when there is, a bear market, and when crypto has a crypto winter, yeah, everybody loves the product. Do the long-term bull cases here too. Like if somebody's investing long, I'm not saying don't go long. I just saw a great opportunity with minimal risk, and it is frankly, I mean, it could just buy me a lot of things, but we're just putting the money back in there. So if I get a Tesla, I'm just saying that I might put Robinhood like as the plates, or I don't know.
So I know you've taken profits along the way,
Yeah.
but are you taking profits right now from the leaps and shuffling them into Tesla? Well, I mean, is the plan, let's say, maybe not right now, but like is the plan whenever you hit the price targets for you to take the profits from Hood and shuffle them into Tesla, SoFi, whatever?
Yes.
Or is the plan to take the profits from Hood and actually buy underlying shares with those profits?
No, I don't plan to go long. I thought about it. I floated the idea because they've actually been building their long-term bull case with the way that they've been getting these IRA matches. They'll bring somebody over and they'll say, "Hey, we'll give you a 3% match if you lock up, if you buy gold for a year, and if you lock up your position with us for 5 years. And so all of a sudden, they have people that are going to be on, I think, the best user interface, especially for any new investor or trader, hands down, like easily. It doesn't compare. And so they'll have them for 5 years. They'll probably have them for the rest of their life, honestly, unless they do another GameStop thing. I don't think Vlad will do that. If he does, I mean, Robinhood's shooting themselves in the foot. But between that, between the Robinhood Gold subscriptions, which it's just $5 a month, you get the level 2 options. You of course get the added benefit as far as the rates. You get a number of other features as well. It's a good, cheap product. A lot of people will just be like, hey, I'm on it. I'll just stay on it. That's how subscriptions work. They have consistent continuing revenue that's going to help them in those winter times. They're building credible products. They're going after the gig economy. There's nobody who is saying, as far as investment people, that's really actively pursuing the gig economy and partnering with these companies where they're saying, hey, if your workers use a Robinhood account, we can actually set that up with you guys. So all you have to do is have these people fill out some paperwork, and it'll have matching benefits. They're doing that. They're going after that. They also launch products about as good as anybody in fintech. Honestly, it's better than Sofi. We'll talk about that hopefully on Sofi Wkly. It's much better than PayPal. My goodness, night and day different. If they had Vlad and Co. shipping these products out for PayPal, PayPal would be a $300 stock right now.
Look, man, it's better than SoFi. I don't agree with. I do have the power to mute you on this stream. Look, I think that if SoFi can just get rid of Jeremy Rischel and replace it with an actual technologist, then they can catch up to Hood really quickly, because SoFi has amazing financial products. They just don't have fantastic digital products. And I think that's the main distinction. Like Robinhood has a fantastic user experience. They have a sticky product that people love. They know how to gamify their experience. All of that is a software background, right? They're coming at the equation from a technology aspect, whereas SoFi is providing fantastic financial products, good APY, good benefits, that kind of stuff. But they don't really have the technology aspect. And I just think that the buck has to stop somewhere. And ultimately, it stops with the person who's in charge of their technology.
Yeah, we'll talk about it Friday. I'm not going to let that get away, but we'll kind of skip that for right now. But like, if you're a fintech, you have to be good at tech. You have to be able to ship out and chocolate chip cookies. So my wife just gave it to me. I'm like, hey, I'm going to take that. So, but no, like Robinhood, they've executed it. Literally everything except for the margin piece this week has gone as good or even better than it possibly could. And so when I was looking at this, I don't do this for every stock. I'm certainly not with PayPal right now, but I'll typically put out a 1-year price target just for myself. I won't tell with Robinhood. I was like, hey, I'm going to share this at the end of December, when I think we were sitting at maybe $12 at the time. I mentioned, I was like, hey, $26, I think, is the base case for Robinhood this year. So far, they're executing better than I imagined. It's above base case. So I have incremental points where I am taking gains. You have to do that with leaps. You have to. Even though, like, if they went to 0 right now, I'd still have made a lot of money for Robinhood. But I'm getting to the point where not all of my Robinhood leaps are in a tax advantage account. And so I'm like so close to that point where I'm like, hey, I'm just going to let it ride. I think that we might be in the mid-20s. Don't know for sure. So, has not been married long. No, I've been married more than half my life, guys. I got married at 21.
No, I said, I think it was a response to this. I said, the fact that Roy has a wife that makes him chocolate chip cookies. And I said, I had a can of beans for dinner. And then the guy's like, he's probably not been married long if she makes him chocolate chip cookies.
Marriage is wonderful. And if you get a spouse that, I mean, there's going to be differences, and there should be. But you have a spouse that supports your goals, aspirations. Like she fully supports me just doing this for fun. Of course, with my PhD, fully supports that job, whatever. Like she's just, and vice versa. That we had an opportunity. We moved down to Texas for her job, her dream job. I was like, yeah, absolutely. We do that. And then you get cookies as a side benefit. So, and of course, with investing, she just lets me do my thing, but she lets me ramble and talk to her about Robinhood or Palantir. Never really about SoFi, maybe a little bit, but yeah.
George, like if you had a spouse or a partner that was up as much as Roy is up on his Palantir and his Robinhood, you'd be making them cookies as well. So I don't blame her. This is an equal exchange. She has access to the portfolio. She sees, and yeah, exactly. There you go. Makes a bunch of money, gets cookies.
There we go. Oh man, like today deserved cookies. I'll just say that. Like, and if you guys like it, I only have two New Year's resolutions. I don't do them every year. One, of course, is to finish this pesky PhD and be done with it. And the second thing is to celebrate more. That oftentimes we can get so focused on our goals. I guess this is old man life advice time. But we can get so focused on our goals and the next thing that we kind of forget to celebrate the little things that are happening in life, especially with our friends and loved ones. So do that. If today was a good day for you, I'm not saying go out and buy a brand new Tesla, although that will help pump the stock. So absolutely. But just little celebration. Have some cookies. Have a Celsius. Help Tovis out there with his portfolio. So
I've been trimming a bunch of Celsius, man. Clean Spark was up like 22% today, so I was happy with that. That thing's ridiculous. It's just go to the casino.
it
I
is.
mean, it's like up 10%, down 10% on any given day. Any given day, no news, just up 10, down 10.
Oh yeah.
Ridiculous.
And I mean, like that's part of its narratives too.
But like
Not
Bitcoin was at
fundamentals.
64. Also, like, sorry to interrupt, but Bitcoin, I logged off of work and it was like 5:30 or whatever, and it was at 64,000. And I went for like a walk. I came back. I think I had a little bit of food. I logged back, like I opened my computer and it was 6:30, 1 hour later, and Bitcoin was like at 68. I'm like, how like how do you move $5,000 in like the course of an hour for Bitcoin? It's just ridiculous. So I'm not
Yeah.
surprised that CleanSpark moves 20%.
Oh yeah, and I'm in different miners. I might be switching over to Clean Spark just because I'm selling the volatility on it. It's a small position anyway, and it's like it's got a better options chain there, and the volatility is even more. So it's like that's what I want. But Sagig72, if you want to throw up his comment there, he says if I feel like Hood has superior products, why don't I own this stock? And between it already being a cyclical, and with cyclical stocks, you just need to know it's okay to own them and just keep holding them, forever or as long as your conviction's there. But I know that there will be a down cycle at some point, and at that point, the market almost always overreacts. Robinhood should have never gotten to $8. Like
Right.
it's idiocy, just stupid. SoFi should not have been trading in sixes. Palantir, a year ago shouldn't have been trading in the five somethings. It's just like, what are
Right.
you doing, market? And in the same token, there's a lot of stocks we can look at and say, hey, this is way overvalued. Robinhood, I believe, if it does what I expected it's going to be doing, I think it's fair value right now, honestly. Like even though it's run some, it can run a little bit more and still be fair value. If it gets to like the mid 20s at this point, it's a bit overvalued at that point. I don't think that we're going to stop it a bit overvalued. It has the narrative. There are fundamental things that are happening and improving, but the market is forward looking and overreacts. And so I think that that's exactly what's going to happen with Robinhood. I think that SoFi that'll happen for eventually too. That we'll get to the point, even as long term shareholders, that we may want to take some cuts and trims. But what SoFi is not a cyclical. They have a resilient business where in times of high interest rates or low, in times where the macro is really good and strong as far as financials, or in times when it's bad, when the housing market is booming, when it's not, they cover the whole gamut. And of course, there's times that are better than others, but they have a resilient structure. PayPal has that as well. I mean, they have 25% of the world's e-commerce. There's times when that's going to slow and it's going to be tough. There's times like COVID where they're just printing money. They're not as cyclical as Robinhood. Tesla is more cyclical. I mean, the car business, frankly, is. Housing stocks oftentimes are as well. And if you're in these, like either be in them for long term, like I'm going to be with Tesla, or look at them and say, you know what, there might be further upside. Maybe I want to own the stock long term, but I'm perfectly happy with just a 400x, not 400x, sorry, 400% gain. And I think that we'll actually do better than that. So, but there's other stocks that right now, like Tesla and like SoFi, and PayPal as well, that are just so beaten down. Not everything is run, and so I see other opportunities, and I'm perfectly okay taking a 4 or 5 or 6x off the table and saying, hey, I just like I had conviction of like it's hard to lose money at this point with Robinhood. I feel the same way with SoFi. under 7. Like they're not going to go bankrupt. I feel the same way if Palantir goes down to 17. I feel the same with what Tesla under 200. I feel the same way with that. So I'm like, you know what? It's okay for me to take some money off the table and do that. I'm not interested in the stock right now. Next cycle, I'm definitely going to keep it on my watch list, but we'll see. And there's also 6 other companies that I'm interested in building out as new positions, 1 or 2 of those this year. And so I'll switch Robinhood with one of the others, I think in the second half of the year for sure, and maybe 2 if I get time to build it out. It depends what Robinhood does.
How dare you double your money and then sell it to buy Sofi? How dare you, sir?
I'm going to take away the buy button for myself for Robinhood.
I also wanted to bring up this comment because I thought it was interesting. Broadcom is a position that I own. So I started in January. I started a dividend portfolio. And that's like, I've been just plowing every spare cent I have. It's actually, I have like 6 different portfolios. And that dividend one is by far the largest one now as of a couple weeks ago, which is insane because like I only started it in January. And in there, I've bought Microsoft, I bought American Express has been fantastic, Target has been fantastic, and Broadcom. Broadcom was one of those stocks that I just feel like caught the tailwinds from the whole semi space, the whole AI space. That's a dividend stock that has just been crushing it over this year for me in that dividend portfolio. And the comment is interesting, right? Because it's like there's stuff that's considered cyclical, but then it's also the 3rd best stock over the last decade. And
go ahead.
Well, no, I was just saying that like even for Robinhood, even if it is cyclical, I mean, you yourself have made the argument that in the future the dependence on crypto is going to be less, and as a result of that, the fall back down is not going to be as bad. So there is something to be said about stocks breaking through those cycles given the right market environments. So I just wanted to present that as like a counterpoint, right?
Yeah, and my thing is Broadcom would have been a great investment anyway, even as a cyclical stock, even without the AI and the semis headwinds, or not headwinds, tailwinds, excuse me.
Right.
But this is one of those moments where this isn't a bubble yet. There are bubbly stocks that are certainly in this sector. I don't think that AVGO is one of those. NVIDIA, I'm skeptical of that being in a bubble. SMCI, I don't know that enough. I'm not sure. It's up a lot. That's all I know. Palantir, no, it's undervalued. I'm going to always say that. Not really. But realistically, like if this particular unique circumstance had not occurred, it would still be a good investment. It just wouldn't be what it is right now. It's one of these generational opportunities with stocks like that. If you're in it or buying it, great. So Robinhood could certainly be that. I don't see. I think that they're going to price in such amount of forward earnings in Robinhood, and there's people that already say, "Hey, it's way overvalued." I disagree, but they'll say at some point that's actually going to be true. That's just how the market works. So, yeah, terrible analysis, useless information, unpopular perspectives. Appreciate that. That's kind.
Like I don't know how to feel. I'm confused. But thank you. Also, I only realized his name was ET FaceTime Home after like a year. I always read it as like ETF, blah blah blah. Like I didn't read anything. I was like ETF, and then after I realized it, I was like, oh, that's stupid of me. Anyways, shall we move on to, after an hour of us blabbering, our main topic of the night, which is what I named my video after?
Yeah.
Apple and Google. So there's 2 pieces of news specifically with regards to Apple. Apple is a company that I hold in the dividend portfolio. I think it's the biggest position in the dividend portfolio. I've just been adding on the way down, which has been fine. I'm honestly in that camp that Apple is going to come out with something that they're not going to be asleep at the wheel during this entire AI race, that they are going to be a player in it. And it's just a matter of time. Like WWDC is going to come up. I think that throughout this year, they're going to announce their own thing. I think in their last earnings, Tim Cook even mentioned that they have an AI announcement coming up. They just bought an AI company called, I think it was called Darwin AI. It's a Canadian startup that they bought for their AI side of their business. They stopped the fool's errand of trying to build a car, and they're literally repurposing that entire special projects team to generative AI. Now, the first piece of news with Apple is with regards to what came out a couple days ago. Apple being in talks with Google over licensing Google's Gemini AI for iPhones. Apple also, I think Bloomberg was the one that reported this. They also reported that Apple has also held talks with OpenAI. And of course, there's no official partnership yet. Google was up on this news, I think like 4% or something. Apple was up like 2% on this news. But it could potentially extend the existing partnership between Apple and Google. As we know, Google pays Apple about, I think, $20 billion a year, something like that, to have Chrome as the default search engine. It could also make Gemini accessible to over 2 billion Apple devices worldwide that exist out there. Now, the interesting part about this is Apple's also being sued for antitrust by the DOJ. That lawsuit is going to come out tomorrow. And the lawsuit alleges that Apple is anti-competitive, essentially, that it blocks rivals from some of their software features. And one of them is the case with Google specifically. And so that serves as a backdrop for this AI news with regards to Gemini, because on one hand, you have regulators that are, saying that Apple has restrictive practices on their App Store, on their iPhone, and we saw this with Epic Games, we saw this with many different apps. Apple takes a 30% cut, and they're like, if you don't like it, GFY. And on the other hand, we're looking at Apple being even more deeply entrenched with Google. It's mutually beneficial for both companies. I mean, I'm not the biggest bull on Gemini, just given the recent news on it. I think the conversation we had with Matt, and still where my head is at, is like, are the bones good? And this is something that's, can be fixed, or is it just rot at the core level, in which case it can't really be fixed? But anyway, so that's essentially the thing that makes this piece of news interesting. We don't have any official confirmation around the AI partnership yet between Apple and Google, or if it's going to be Apple and OpenAI, which I would be much more bullish on. I actually saw people, I saw somebody post on LinkedIn earlier today saying like Microsoft is a new Google. Like they have advancements in AI. Satya Nadella is killing it. I think Microsoft also hired the co-founder of DeepMind. Microsoft is just absolutely crushing it in the AI space. They're, in my opinion, the clear leader so far.
Oh yeah, easily.
So yeah,
that leadership.
Whole backdrop.
Yeah, we've talked about it. That leadership, I mean, it makes a difference. And I was not. So we already had the Google discussion on the Google side of it. It's good news for them, even though I'm very skeptical on Gemini. I'm skeptical on Sundar, but even having this as a possibility and then talks where they say, hey, our technology is obviously good enough for Apple. So throw us some bone.
Well, not only that, but it gives Google like a Trojan horse into the household of like 2 billion plus people.
Oh yeah. And the other thing, though, as far as Apple, like this is just crazy to me. Tim Cook, I know he's more of an operator than an innovator.
Right.
Not that there's no innovation. Vision Pro, we'll have to see how it does playing that out. But they worked forever on the EV car. They gave up on it. Supposedly, they're transitioning people into AI. These are just talks. Maybe it's a temporary stopgap measure. Maybe it's to help them with something, and they have their own product supposedly. But the rumors are, I don't remember the name of their product, but their internal AI is deficient. It is not good. It's not a credible product right now.
I think it was called Project
That's
Ajax.
right. It started with an A, so Ajax sounds right. And to come to the point this quickly, Apple's normally very slow to do this sort of thing.
Yeah.
where they say, "Hey, we need OpenAI, or we need Google, or Lord forbid, we need Microsoft to be able to empower us." And OpenAI, I mean, they've got the ties there.
Right.
That's shocking to me. It's like, what have they been doing this whole time? Like,
Right.
what's wrong with them? Siri, when it launched, it was this amazing, innovative thing. And now I don't use Apple. The only Apple product I have are the AirPods, nothing else. But, my wife has an iPhone, others have iPhones. At least from what I've heard, Siri is just, it's functional, kind of. But
Yeah.
imagine that with an LLM. And Apple, for whatever reason, they're like, hey, we're going to focus on some other things. We're not actually going to innovate here, and we're going to punt that to somebody else. That's I made this prediction that over 5 years that Google would underperform the rest of the Magnificent Seven.
Hmm.
I mean, that might be Apple, honestly. If these rumors are credible and true, benefits Google and Apple. They, I guess, just don't even know how to innovate anymore, or they hardly do. Like that,
So
it's
let
shocking.
me let me try to present. Let me try to take the other side of that argument. Um, I'm not, like I said, I'm not particularly a fan over Gemini specifically. I think Siri has definite deficiencies as well. I think for Apple to create a team internally to create their own AI, they would be even more behind, right? OpenAI has been working at this for like a decade now. Google has been working at this for quite a while, and so the existing players are definitely established. Um, to some degree. But I also think that Apple has a benefit from this because I can't imagine Apple being the ones paying for this partnership to Google. It would likely be the other way around where Google is paying Apple because Apple's network is such a I don't know, this is where I'd love your thoughts, but if you were to say, "Hey, Tev, like draw out the terms of this deal," 9 times out of 10 I would say, "Oh, yeah, it's obviously Google paying Apple because Apple has other options with OpenAI with others." And it's like 2 billion devices that Google's AI, if it has that exposure to 2 billion devices, imagine how much faster it can train and crush every other competitor. And so it's beneficial for Google, even if they're paying Apple billions of dollars for this, to leverage Apple's hardware ecosystem, their network, because Google can just train their model way faster, and they can make that money back on the back end through other partnerships with Gemini. And so I think Apple has leverage here. Google already pays them 20 billion a year just to have their search engine on Apple. I could totally see this being a similar situation where they'll pay Apple a money. And so like Apple just takes a rake. They don't need to put skin in the game to participate in this race, right? Like it's not they're not the gold miner. They're, selling Levi's jeans or whatever to everybody participating in that AI race, and they're doing so every year, similar to the partnership they already have for the default browser. They could just raise the rates, right? It was 20 billion, I think, when it was last reported in like 2018 or something. That's definitely higher now. So my point is Apple can take a sideline position and get paid very handsomely to do so.
Yeah, I don't know what the price is, and it doesn't really matter. Apple right now prints money. They can burn money for years, billions, and it doesn't really matter. I think the biggest thing is it matters as far as what they internally are able to do. If they have lost almost all of their innovative edge much more rapidly than expected, yes, this is mutually beneficial. This collab with Google, if it actually proves to be fruition, especially if there isn't really a price to it, but there is a price because they've then punted that part of their business, and they're not likely to develop or go back to it. But they'll just say, "Hey, for AI, we will be beholden forever to somebody else," and that's a dangerous place to put yourself when you're a company like this, because if you have lost your innovative culture and you're not able to do that effectively, there will be other parts of your business that will come up to and be like, "Hey, we don't actually have a credible offering in this. Let's punt this too." And little bit by little bit, you'll become less and less relevant. Apple has hung in there as one of those resilient stocks that I believe over the last, this would be the third decade that they would
Right.
be in the top 10 as far as market cap for publicly traded companies in the US.
But like, so
This
Roy,
might be their last.
absolutely, it might be, and they might definitely underperform. But again, just to present the contrarian argument, does Apple need to be the big innovator? So here's my point. Nobody's creating new phones. It's not like in the early 2000s where you had like Nokia, Sony Ericsson, all of these different like phone brands in a perfect competition. BlackBerry consolidated a lot of those companies, and then now what do you have? You have like Apple, Android, and like 99% of the market is made up of those two brands, let's say. And so if everybody is going to use iPhones in the future, which like I've been an iPhone user through and through, I would never switch to an Android. Yeah, sure, I might lengthen the cycle of when I'm going to upgrade my new version, but I'm never going to switch to the Android. And so that moat is so freaking deep for Apple that that provides such a huge value proposition in the market that let's say Apple, even for their default browser, if they canceled that contract with Google and they opened it up, I guarantee you Microsoft would come running to put Bing on the default browser and they would pay very handsomely, billions and billions of dollars in order to do that. Why? Because everybody wants a piece of Apple's network of their hardware ecosystem. And so Apple has built this massive moat around their business via their hardware that they don't really need to take a stance in every new wave of innovation that comes forward. They can just sit back, milk the dividends that come from this, leveraging that ecosystem, and buy back their own stock and still grow, handsomely from that. So I don't know. Like I agree, at some point it's going to plateau. I'm bullish on the Vision Pro, but I also think that Apple's moat is going to be a saving grace for them that keeps them in the race much, much longer than anybody would think.
I mean, yeah, they're not going extinct or anything, but I mean, they were one of those companies where people thought, that they could do it 3 decades in a row, be the largest, one of the largest top 10 U.S. public companies, 3 decades in a row, 4 decades in a row.
Right.
I don't think they can do it. I think that they've already peaked. Apple Vision Pro, yeah, I think it's a bit better than I was expecting initially, but they've lost their innovative core and edge. Maybe they're top 10 next decade. I don't know. But if they're punting on major pieces, so the car, that's fine. That's not like their core business, whatever. I don't
Right.
think they should have ever gone after that anyway. If they really want a car, just buy Rivian. Uh, Infinite
Right.
cash glitch to a nice product that people like that they're buying in protest because of Elon, not really, but it's a nice product, good thing. They can do partnerships all day. Like this partnership with Google. That's not going to kill them. That's not going to hurt them. But that internal software development, I mean, that was a core part of their culture. And if they're getting rid of that, I don't know, man. A company can switch from being a cash printer to dead in the water very, very quickly, especially if after Tim Cook, because he won't be here forever, they bring in
Sure.
somebody else that is just very mediocre. I think Cook's fine, like he's okay. Apple will really, really struggle. There may be a point where, and I think that it will happen. I just don't know when or what it'll look like. That we're not all going to be using cell phones. And what will they do at that point? Like that's their business.
I think that's like, and I want to double tap on that because I think that's really the nail on the head is unless and until somebody disrupts the iPhone hardware game, Apple's always going to be around. Their app store alone is going to ensure that because of their monopoly and their walled garden on all of this stuff. And so until
Yeah.
we move to a place where everybody's using like Rabbit R1 or something that just completely erases the phone, or until let's say, I don't know, Solana launches their phone worldwide, or Tesla launches a phone, or whoever, Nvidia launches a new phone, and
Solana.
just like and just a new entrant in the space starts to eat up market share, I think that's like the biggest bear case for Apple. But so long as the paradigm is Apple is the hardware layer along with Android, whatever, then I think that they have such a cult following for people who buy their hardware consistently and have been training that user behavior for decades that all of the software layer they can just license out and collect a pretty penny to do so.
Yeah, well, as far as the App Store, I mean, there's plenty of people that are upset with their model. There's been a
Yeah.
lot of pushback about that, and I know that people are. I mean, they're on there for a reason because that's where the people are. But I don't know if you've have do you are you around younger generations, teenagers, and young 20-year-olds like 20, 21, 22?
Not
college
really.
age folks.
Not really.
They at least, and this is qualitative, short sample size or small sample size. They're not all about Apple. That's shifted. I mean, there are certainly some that are passionate about it, but at least when I was in college and when I was in taking my master's program, almost everybody that was around. I mean, not almost, but there's a huge amount of people that were diehard Apple people, and there still are my age, your age, but that younger generation, they are not diehard Apple people.
And
Like
that's
the
fine, but what's
product.
the alternative?
Pardon?
What's the alternative? That's what I'm trying to get to.
Well, that's the crazy thing is I think the best phone on the market is actually maybe it's Samsung, but I think it's actually Google. Their Pixel Pro is just phenomenal. That's going to be my next phone. I don't care for Apple things, but their actual product, it's not very innovative because it's Apple. Like they basically copy other features. They execute it well. It's very polished. I'll give them that. The functionality is very simple. The cross integration, but it's not. There's nothing groundbreaking in that phone. Time and time again, they might have like one or two cool features, and that's the reason why that business is really slowed for them. Is because people are holding to their iPhones. Do you have an iPhone?
Yeah.
How many years old is that?
It's a 14.
Okay,
So
so
mine's a 14, but before the 14, I had a 10. So,
okay,
and before the
yep,
10, I had a 7. So
yep.
basically every 3-4 years is my like cycle time.
And it used to be every 2 years. I know part of that is just the rate of technology changes is
But like
changed
if they're
a bit.
not innovating and the 15 is exactly the same, I think they mentioned this on the All In podcast where literally the participants in the podcast were going into their settings live on air and like checking what version they had because they had no idea because it's like copy paste from 13,
Oh
14,
yeah,
15. So for as long as it's like that and it's not there's no innovation between the models, like you're going to disincentivize the trade-ins and renewals.
yeah. The craziest thing is I know Google's a massive conglomerate, and Pixel Pro is not like a major part of their business. Google Fi, but they still have that. It's odd to me that they would want to actually put themselves in their hands of yes, I know a collaborator, all the Mag 7 basically will collaborate and have all these deals, but you are putting yourself in a dangerous situation where you are reliant and beholden to your competition. And I think maybe the second best competition, other than the HTC One is pretty nice too, but really the Samsung is maybe the
Hmm.
premier along with Pixel Pro. It's dangerous. You don't want to do that ever in business. And if they're talking about it, I think the writing is on the wall for them. They're not going extinct. They're not going to die out. They'll be around probably the next 2, 3, 4 decades. Who knows? But not the Apple that we know, not the powerhouse, not the chat cash generator, not the innovator. It'll be some old company like GM.
I mean, yeah, it definitely could be a possibility. Look, I don't think Google, by any stretch of the imagination, enjoys paying Apple, as much as they're paying them for the browser situation. I don't think if this Gemini deal goes through, or if it's actually reality, whatever, and Apple ends up making money off of it, like I don't think Google's happy about that. But they're doing it because of Apple's leverage that they have right now, because of their strength in the market, because of their position. Until that's the case, then Apple still has a place in the Mag 7 or however you want to put it.
For now.
Now, I think like they're in such a strong position where they have hundreds of billions of dollars in cash. They have some of the smartest people in the world working there. If Tim Cook retires or is succeeded by someone, I don't think it's going to be someone mediocre. Anything could happen. Like they could fade away into oblivion and become the next like Dell computers or whatever, the next HP. Sure, it could happen, but I think that they would catch themselves before that happens. Maybe that's just wishful thinking.
Maybe. I mean, GE was what thought of that, too.
Sure,
I
sure,
think GE
absolutely.
is actually a better correlation to them, that they were that innovative company where everything was created, everything was made, they could do no wrong to, what they are today. It's not great. And they struggled for many years. And the biggest thing is they went from everything that they created was innovative. It was
Right.
maybe not first in the market, but it was always quality. People could buy it; they would know it would be reliable. To relying on not just American manufacturing, but other types of manufacturing as well that just wasn't as quality, and so that deteriorated the brand over time. Then they finally got in just a terrible CEO. I need to re-go. I know that there's a movie on that. I need to watch that, but it just the whole thing fell apart, and that can happen a lot more quickly than people expect. Because I mean, people, yes, are in the Apple ecosystem. That's going to be around forever. But the young people are not thinking of Apple the same way that you and I do.
So
It's not the same company already.
let me just ask you this then, because so Vision Pro, we'll just put a pin in that for now, because that has the potential to be um, a big revenue driver for the business going forward, especially if that entire space gets picked up over the next decade, which is expected to. I remember when the Apple Watch came out, and I was like, this is so stupid. They haven't launched a new product since Steve Jobs died. And I think Apple Watch came out in like what, 20, I don't even know, 2017, 2016, something like that, maybe 2014. I don't know. And it had been many years. And then Apple Watch, like I see these infographics, and it's like if Apple Watch was a standalone company, it would be, whatever in the Fortune 50, like as a standalone company with the revenue they do. These products, they sell very well because of Apple's moat, their ecosystem, and their brand stands for quality. It's a trusted brand, right? So, but anyways, so my point
Yeah.
on all that is that Vision Pro could definitely be a lifesaver or a lifeline for the company, but we'll put a pin in that. Now, with regards to the Gemini point specifically, there is also the other alternative that Apple is just leveraging Gemini in the short term to announce something later this year. Hey, the new model, the iPhone 16, whatever, is going to have this AI thing, blah blah blah, incentivizing a whole wave of people to upgrade. But why is then Apple diverting their entire, Project Titan team over to Gen AI? Why isn't Apple buying a Canadian startup for AI if they're never going to have their own in-house AI? I honestly think that there is a sure possibility that Gemini could be a stopgap for a year, maybe 2 years, so as to encourage people to upgrade into the next cycle, so as to signal to the market that Apple is in the race with regards to AI. And then in 2 years, they can come out with their own stuff in house.
Man, I think it's better to just be late and have your own product if you're going to do that. If it's going to be a year or 2 years out, Apple does that. I mean, like you said, it's a sticky ecosystem. People are not necessarily going to switch, especially the type of people that use Apple phones and are in that ecosystem. Just because they don't have Siri integrated. Like you can, somebody had mentioned it earlier. I've actually not used this. I use Chat GPT all the time, but
Right.
you can just speak right to it. I know it's a feature. I just haven't used it yet.
Right.
But no, I mean, there's other alternatives, and they could have just said, you know what, we're going to hold off a couple of years. That's a typical Apple play. This is something different, and I don't know. We'll see. It makes me fairly bearish towards Apple. Vision Pro, yes, I know we're put a pin in it, but that
Yeah.
could save them. Only time will tell. As far as what the actual adoption rate is, how that's built out. It seems like it's a really good product. It's very expensive, but that's typical Apple. Price will fall over time. It'll still be expensive, but we'll have to see. I just it shocked me when that mention came out, especially because I don't regard Gemini very well. So it seems like that they're not only
Mm.
saying, "Hey, our AI is nowhere near ready for prime time. We're so far behind that we actually think Gemini is good." Like, what are you doing? Oh man.
Yeah, I don't know. I think it might have something to do with the existing partnership that they already have with Google. Like if Gemini comes uh, in a bundle with Chrome, they can already leverage that. I mean, they already said they're in talks as well with OpenAI. I just wonder that Microsoft will try to add Bing on top of that, which nobody wants, or try to sell some type of Microsoft product. But I don't know. Like I do think that like Apple's um, mo is that they're never first, but they're always the best quality. And I don't know how that's going to work. Well, I mean, that's their focus,
They're
right?
good.
Like, right? Um, I don't know how that's going to work with AI because AI is so fast moving. And let's just say they're going to introduce their own AI model in house that they're going to release in 2 years and use Google as a stopgap. Well, throughout the entire years they're using Google as a stopgap in the short term, they're empowering their competition, right? They're making Gemini smarter. And
Yeah,
so,
yeah.
I don't
That's
know.
it's so dangerous, man. You can't do that in business where you're in
In,
competition with them.
in AI specifically, where it's like, it's so like you wake up the next day, tomorrow, and like all of a sudden a new thing has dropped. Like it's so fast moving.
Yeah, and it'll be interesting too, just to see what the lawsuit is. Like you mentioned, it's vague. We just know it's antitrust. There's rumors of what it can be. One of those things, which we'll have to see. There's already a lawsuit, so I don't know if this would include it as well for this in the United States. But the NFC chip, which you
Mm.
click and you pay right there with your Apple phone using Apple Pay. They have closed that to every single other developer. You can't use it. You can't change it to PayPal or Venmo or something else or Cash App. In the European Union, you can very shortly, just because they settled with the European Union on that. So I'm curious if that's thrown in there. I don't know that that'd be the main thrust, but it could be something that's actually disruptive to talks like this as well with Google, just because this has been a. I don't know that it'll actually go anywhere,
Right.
but there, at least under this administration, has been a lot of antitrust type actions. I think
I don't think it's going to
there's
go anywhere, man. So
yeah.
here's what, Roy. Apple is the most largely held stock across Congress members. Like it's like the number one held stock across all of them. Apple's been in 3 antitrust suits in the last 14 years. And this most recent suit, the investigation started as early as 2019 under the Trump administration. And yeah, it did heat up after Epic Games and after all of this stuff went down. But again, like the government is such a slow moving dinosaur that they're almost like a leech, like they'll latch on to Apple for a little while, they'll gaslight them and shame them, and then maybe make them pay some type of fine, a slap on the wrist, and then they'll like F off for another 5 years until the next
Oh,
time,
yeah.
comes
But
around. So
it
I
can
don't think
slow things down, is what I'm saying. If Google's
sure.
in talks with this, they can say, you know what, we need to revisit this because Google does not want the scrutiny either. They've actually been,
Yeah, but
especially
Google's been
during,
antitrusted as well, right? Like they've all
yeah,
been,
no,
Amazon's been
exactly.
antitrusted, Amazon.
Yeah, Amazon under, I can't remember that gal's name, but that was just ridiculous. I thought so, but
So
uh,
I think the point is like nobody really cares about the anti like this is not the first time, nor will it be the last time that they get a slap on the wrist by the government. Like and
yeah,
f-
so
and what do you call it? The lawmakers and the judges of this antitrust, like they're incentivized to not give Apple a huge slap on the wrist because they all own Apple stock.
I mean, things like that could still happen, though. I mean, we saw what happened with Delaware with Tesla. It wasn't antitrust,
Yeah,
but
but sure, but like that was politically motivated. I don't know. Like we're gonna get into
yeah.
a rabbit hole,
Well,
but I think that was. I don't think that's the case. Apple doesn't hold that much of a hatred across Congress as Tesla would.
that's true.
Not
Yeah, Apple
everyone.
is thought of favorably. That does play in their hand. Tim Cook is actually very good with regulators and regulation.
They're
Um,
huge in lobbying too, and more recently, even in recent years.
but it could slow things down, like partnerships with Google is the main thing that I'm saying. And I'm hoping, as a PayPal shareholder, and you should hope this too, that they open up the NFC button as well because they're ready to go as soon as that's open up in the EU. They're ready to go right there with their product. So,
I mean, I'm a
yeah,
holder in both Apple and
yeah.
PayPal, so I'm screwed either way.
I mean, like that's the thing is like everybody does own Apple. Like if you own any index funds, you own Apple. I own Apple. I don't own it directly, but that's one of the largest positions in the S&P 500. At a time, it was the largest, but those days, not right now.
Roy, I know Bootleg Weekly always goes over in time, and it's always a pleasure to have these conversations. We've now been streaming for almost exactly 1.5 hours. Shall we call it there?
Yeah, we got a special guest next week, so you want to be sure to tune in for that. Won't just be the two of us, but it's been good.
Everybody, thank you for watching another episode of the Bootleg Weekly podcast. We'll catch you in the next one.